Hello, everyone. Welcome back to the Daily Gold podcast on the Daily Gold YouTube channel. Thank you so much for tuning in. This is being recorded on Wednesday, February 12th, 2025. And with me today is David Morgan. He is the editor and publisher of the Morgan Report. And I like to call him Mr. Silver because since I've been following silver and everything I've learned, nobody knows more about silver and the history of the market than David Morgan, and that's why we have him here again today. David, let me just do away with the pleasantries and get right to it. Um, with respect to what's going on, or maybe you could tell us what's going on in the silver physical market right now with respect to the EFPs, the exchange for physical. I mean, that had a pop, I believe, a month ago. Um, and other happenings in the market because we see gold is starting to come out of vaults, and I'm just wondering if you could just give us a summary of if that on the gold side is impacting silver, what's going on with the EFP, and also anything else that we should know about that's going on in the physical market.
All right, Jordan, that's a bit to unpack. First of all, welcome everyone, and thank you for having me on your show. On the silver market, let me just digress a bit and just talk about the silver market. So it's really the silver market is the commercial bar 1,000 ounce derivative derived price market. So when I talk silver market, I'm really referring to the 1,000 ounce bar market that's done in the paper exchanges primarily in the COMEX, but there's also the LBMA, which is a physical market, but primarily over-the-counter derivatives market as well. In that silver market, there's another silver market, which is what I call the retail market, which is what most people listen to your show, my show, the financial markets even look at it when the price of silver comes up. They think about, what a cost would be for a silver eagle, silver maple, a bag of silver, a silver bar, a 100 ounce bar, a kilo bar, that kind of thing. That's the retail silver market. So let me just address that first. The retail silver market's dead. I mean, it is very, very lackluster. There's been more sales than buys. The spreads have gone to extremely low markups from what they were, let's say, a year ago or longer. And the wholesalers are discounting metal, both gold and silver, because the market is so slow. That's the retail side for silver and also for gold. Now, back to the silver market. In the silver market, there's been an arbitrage opportunity. An arbitrage is when you can buy something for one price in one market and sell it for a different price in another market. When that takes place, you buy it at the low price, you sell it at the high price, and sometimes that takes movement of the product from point A to point B. That's taking place in the silver market in from London to New York. And also that arbitrage requires physical metal in case that someone stands for delivery. You've got to put up the cash, you've got to be able to deliver. On top of that, there was a motivation before the arbitrage began, or about the same time, that the market was concerned about a proposed tariff by the Trump administration. And the only knowledge that the market had was that it might be 25% across the board. So a lot of silver and gold especially moved from the London market to the New York market so that it wouldn't be, I'll say taxed, but have a tariff put on it. So that started, arbitrage continued. And so there were motivations to do it in two ways. One, for the arbitrage, and two, just to make sure if you needed to deliver, you got it there early so you wouldn't have to pay a penalty or a tariff of 25%. Now, as that was taking place, there were times when people that were really not interested in moving their metal at all, had never thought about moving their metal at all, discovered that the delivery delays were long enough to cause some concern. My goodness, it usually takes, a couple of weeks, 3 weeks, whatever it is on average. And now it's up to like 8 weeks or maybe longer. Well, now rather than worry about the tariff or not interested in the arbitrage opportunity, you have enough there or whatever the case may be, he was thinking, well, wait a minute, maybe I need to repatriate my gold. It's been sitting there in London for a very long time. And the way things are going, I'm motivated to take it. And really for a couple of reasons. One is, well, I'm worried because someone else is having a delayed delivery. And the second one is what happened way back when sanctions were put upon Russia, when the United States, and in my mind, one of the biggest geopolitical blunders of this century, and that is taking their $300 billion in US treasuries and blocking them, making them unavailable to Russia, and then having the gall to use their money to support their enemy. So other countries looked at that and said, wait a minute, why would I want to have reserves with the US if they decide that I'm politically incorrect? They might freeze my assets. I think I'll stock up on gold. It's international. There's no counterparty risk, and it mitigates my problem keeping US dollars. So probably overtalked it. And as far as the connection, there's always a connection between gold and silver, but the gold thing is what's really gotten people motivated. And now that that's happening, and the main delivery month for silver is March, looks like there's been a lot of movement out of London into New York on silver, arbitrage again. Tariff problems gone away, at least temporarily, but there's still movement in the metal. And then, of course, there's conjecture out there that there's enough contracts that are still open. And once we go past first notice day, that if everybody stood for delivery, there'd be a real problem on the COMEX. But we've heard that year after year, month after month, week after week, and it never happened. So I can just throw it out there, Jordan, that yeah, mathematically we see it again and again and again. I'm not getting too excited about it, but there are others that are.
David, let me follow up and talk about the industrial side of silver because I am a huge skeptic on this just really having any impact on the price. I study the history, and I know history can change, but I study the history, all the big moves in silver. Basically, gold moved first, silver followed. There's been years where we've had this uh, big deficit. The price still went down. I know that we're having a good year now, and there still is this big deficit. Tell me where I'm wrong, and tell me, if so, how can this increased industrial demand, like how or when can that have more of an impact on the price?
No, I agree with you, and I'll try to explain it. So the all markets move at the margin. So what's the biggest variable? And the biggest variable for silver is investment demand. So if you have industrial demand, and we have, and it's gone up steadily, not steadily, it's ebbs and flows. The overall trend has clearly been up for the last 2 decades and a half. So the last 25 years, the silver demand has gone from 35% of the market to probably about 60% of the market. But that's like a stock buyback program. If you're buying back 10% of the float every year, that's a constant. And let's just say it's a proposal that's implemented for 5 years. So there's an offtake of that float. Same thing on the industrial side, except it's increasing every year, or generally it's increasing every year. But that's a given. And that's almost a constant, or it's a steady state increase. The variable is the amount of people that want to buy silver for investment purposes, be them retail investors or institutional investors. That's the variable. So when people get scared and decide I need to buy silver because I got to barter with it, or I need silver because the price is really undervalued, or the gold silver ratio forces me to swap my gold for silver, or I just heard, Jordan interviewed David and I decided I never bought silver, I want to have some, or whatever the motivation is. The market doesn't really ask why, but when the variable is the ebb and flow of investment demand. So when we got into a very tight situation in the retail market, for example, the market in the retail side got these extreme premiums, as you probably remember, Jordan. I mean, we were seeing like 14, 15, $16 on a silver eagle when the spot price was somewhere like, I don't know, near 30 or something. So you're paying like 60% premium, and people were doing it. That was a tight market on the retail side. So it's the main variable. The main variable is I need silver, I need gold. There's a big price spike, and people run in to buy it, and then that subsides, or a big user, not user, but a big investment concern buys a great deal of silver, like Scott Maynard purportedly did in the 2020s in Davos. In the year 2020, 320 million ounces, about a third of the whole silver market, was bought by the investment professionals that year. That moved the market. So that's what moved the market. It wasn't that there were more solar panels built that year. Someone came in and bought a third of the silver market in 1 year. That moved the market. So it is the variable that has the biggest swing. The jewelry market isn't going to move it that much. The industrial market isn't going to move it that much. But people's worries about the economy or whatever the motivation is to buy it for monetary investment purposes, that's what moves the market up and down. When they sell a bunch, the market goes down. When they buy a bunch, the market goes up. It's a little more complicated than that, but not really a lot more. I mean, people get very concerned about the COMEX commitment of traders and what the derivatives market does. And it is of concern and it does set the price. But what sets that price? It's the amount of purchases for really for investment side. There's not a lot in the paper markets that have to do with anything other than speculation. Very little that has to do with industrial use. You might hedge in the futures market for the industrial side, but not much from the industrial side goes through the COMEX or the LBMA for that matter. It's the retail, it's the investment side.
Okay, it's a good answer because it lets me segue onto investment demand, where I have two or three questions rather than trying to ask them all at once, which is a habit. I'll see if I can go one by one. The first question, David, is please inform us on investment demand and like, can you break it down and tell us like the parties, the hedge funds or sovereign wealth funds or investors with really deep pockets. Can you categorize investment demand and who the players are in any way?
Yes, you can. And this will sound conspiratorial. I don't have a tinfoil hat handy to pop on. But it seems like since the Scott Maynard, that was the chief investment officer at Guggenheim, talked about silver being the best investment in 2020, here we are 5 years later. No one really from that side of the equation is really very interested in buying silver. It's almost as if the whisper is out. Whatever you do, don't buy it if you're an investment manager or a big time investment house, which is kind of ludicrous because Warren Buffett bought a great deal of silver way back in 1998, 99. Regardless, the whole market has been the retail side more or less for the last few years. There's been some institutional purchases, but not that much. Just look at the SLV. And now what you're seeing is the movement of all the silvers is more or less worried about the tariffs and what we already outlined. So the industrial demand is steady and increasing. So that's again chipping away at the float. And the investment demand has not been that robust on the institutional side. Gold, on the other hand, is pretty much all retail, almost all, excuse me, I misspoke, not retail, but institutional side. It's the central banks, it's China, it's Russia, it's other nation states, as I outlined before, and they're buying it. So we know on gold, it's institutional investment. We know on silver, it's not institutional investment. And we know on both retail, gold and silver, it's rather flat to very, very mediocre.
With respect to those institutions, those big institutions that you're talking about, and other big players categorized as investment demand, David, when do those parties start to dip into the market or come in size? I mean, are they, does momentum I mean, there's supposed to be big money and smart money. I mean, when they see the price going up or breaking out a certain level, like, does that get them into the market? Or if they think there's going to be a accelerating inflation, do they start to dip their toe in? Or could it be when they say, oh, well, gold's gone up a lot and silver hasn't moved enough? Could that be it? I mean, I'm throwing out reasons here, but you probably know, like, what are the fundamental developments or other reasons that get these big players buying silver?
But let me address gold first. It's easier. I'll get to silver, but basically on the trading side, it's the algorithms. So it's an equation that when gold gets to a certain price, if it stays above there for a certain amount of time, then the momentum has shifted to positive. We're going to buy it. Now that buying usually takes place in the futures markets, but on the physical side, it takes place, as I said before, central banks primarily, and there's ride-alongs that do it: sovereign wealth funds, hedge funds, and then managed money, that type of thing. On silver, it's similar, similar equations and everything else, but yet a lot of the silver is primarily just a derivatives market with not a whole lot going into the physical side outside of the ETPs or the ETFs. And those, as I said, really haven't been doing nearly what the market has been doing in the gold side. But there is some institutional awareness. And I think what will happen is as we go through this next month or two and see what happens after first notice day in the silver market, and they start getting the receipts saying that, are you going to deliver or are you not going to deliver, and see what that looks like. And we get down past that week and we get into where you got to put up or shut up, either close out your contract with paper or produce the metal, we could potentially see something taking place. But there is a steady draw on, not to make my last answer in that incorrect, but if you used a linear projection and you said that silverware stays steady, jewelry stays steady, and industrial demand continues in the same way it has over the last 2.5 decades, in theory, that line would cross all silver at some point, meaning that just industrial demand would corner the market. But that would be years out. So, and that's also making an assumption that's probably invalid, which is that industrial demand just continues to grow indefinitely. Will it level off? Right now, China has said that their amount of solar panel production for 2025 probably peaked in 2024. Now, we take them at their word or not, I don't know, but at least the idea is, no tree grows to the sky, as you and I, as market, students know. Nothing goes up forever. So.
Okay, now let's get into the market today and numbers. Last interview we did, I think it was the end of September, and you did say we were going into an intermediate correction in silver. Now, silver went up a little bit, but then it topped. So it topped and corrected. So that was a pretty good call in my view. I guess, well, before I get to the price action itself, let's talk about the gold silver ratio, because this, if we're looking at it, it's been in a range for several years. Gold is getting close to break out above that ratio. Now, I would say, we're so used to the last 10 or 15 years, that would be a really bad sign for the silver market. But Dave, you look at, the early 2000s and at times in the 70s, there were points when gold was really outperforming silver, but they both were going up and it wasn't necessarily bearish. So that's my 2 cents. But give me your thoughts on the gold silver ratio. And if it were to break out in favor of gold, I mean, does that change how you're looking at the market right now?
Well, as a student of the market, you learn early on, if you pay attention, that the market knows more than anyone. And then, of course, you want to know why. And sometimes you don't even get the why. It is the way it is. I mean, the reason why you wouldn't see silver participate as well as gold would, the why would be because the market doesn't look at it as a monetary asset. But it doesn't look at rhodium as a monetary asset either. And it had a big move. Palladium had a huge move. And those industrial metals moved because it was needed for industry. And on top of that industrial demand, there was speculation. And it was the speculation that took those metals higher. So the same thing could happen in silver. So anyway, slice it, it's hard to get out of the investment component that's needed to take silver prices high. Disappointed, but not worried that much that silver won't participate and actually, in my view, still outperform gold. I think that what I want to see numbers wise, I want to see the gold silver ratio at 70 or lower. And as you said, we're in the, high 80s at times, pushing, the all-time high was about 125 in March of 2020 when the illness broke out. That was a spike. It didn't last very long. I luckily bought within about 3 days of that spike. So I got a pretty good slug of silver at a very good gold silver ratio basis. But I do pay attention. I think it's important to at least know if silver or gold is undervalued relative to the other one. I think gold is overvalued relative to silver or vice versa at this point in time. I think everybody should own both. I think the more conservative you are, you should go with gold because gold is a monetary metal basis how the banks look at it. Silver hasn't been a monetary metal from the bank's viewpoint for, since the late 1800s, 1873 or 1900 or so. And of course, circulation wise, it came out of circulation in 1965. But it doesn't mean it isn't quite valuable, undervalued, really. And it is required in everything high tech. So there is a industrial component. So all it takes is a little bit of that variable we keep talking about, investment demand. And really what happens on these equations is the smart money knows silver is very volatile. It does, what I coined on a Paplava show years ago, silver will scare you out or wear you out. It'll go for months, sideways between a trading range and just be so boring. You wish you never heard the word. You wish you didn't own it. You could care less about it. Then all of a sudden, for some unknown reason, or maybe a known reason, it'll take off and just shoot for the moon. And that's during those times everyone gets excited and the market feeds on itself. You start buying, the algorithms kick in, institutions come in, you start, getting further feeding frenzy. And it being such a small market, you can watch it do what I watched it do a few times in my life, and that is go from, the sleeping giant going into the talk of the town and watching it go from like $15 to $50 in a matter of a few weeks. And, there aren't too many commodities markets that'll do that, but silver can do it. It has done it, and it'll probably do it again. But you want to be really early. And the main problem, as I said to you last time, Jordan, thanks for letting me drone on a bit. The idea of silver is basically to have a hedge position. You don't want to stake your fortune on the silver market unless you are a professional trader or you're a jeweler or you're making colloidal silver or it's your business. But you just want to have some silver. And that amount really isn't that much for most people. And if you do that correctly and you have a bar or two, depending on your net worth, and you put it away and you forget about it, then when it goes sideways and does nothing and is wearing everybody else out, you're still having a great day, great month, great year because you own a little bit. You really don't care if it goes up or down. If it does go ballistic, you're going to have enough to take advantage of it. Or if things go crazy cuckoo and the gas stations close down and you need to barter with it, you've got it. So, I mean, that's the attitude I think most people should have toward the market. But once people learn about the banking system and all the stuff that you and I talk about, study about, talk about, people get enamored with the philosophy behind it and think, well, I'm going to put up my grub stake and I'm opting out of, the system at large. Of course, you can't, but I'm going to take a bigger piece of the silver prize than maybe on calmer days you might want to put into the silver market, if I'm making sense. Most people that get pissed off about silver is because they bought too much. They bought the wrong kind. They bought in a hurry. They didn't think it through. They bought it on emotion. And then they're looking for somebody to blame for the actions that they took.
Or they're just really angry about something else and they're just projecting their blame. But that's another conversation. Uh, One of my last questions, Dave, let's just get into a basic, short-term question. How are you looking at the market now? Short-term, medium-term? Can we get to 40 this year? Or is silver, I mean, is it ever going to break above 33 to 35 this year at least? I mean, what are you thinking?
Yeah, I think it will. I put that in my forecast issue in January. I did say I think we could see 40. Just because we see 40 doesn't mean that we stay there. And it doesn't mean that it doesn't print intraday at 40. I don't know. I was asked to write an article for executive review. Um, and he wanted me to say, silver's getting to 50. And I don't know, I don't mind writing these articles that I'm independent. I don't get paid to say, silver's going to 50 this year or anything like that. Thing about 33, and that's a pretty good, you know, demarcation, as you know, uses technical work as well, but roughly above that level, there's a much overhead resistance. And if there were something to occur like, I don't know, geopolitical or even industrial, or maybe a combination of both, where all of a sudden silver got a shot in the arm, or failure to deliver or something like that, you could see silver move pretty rapidly because it is such a small market. So that very lackluster retail market I keep referencing during this interview, all of a sudden the premiums start to perk up because that small amount of silver in whatever form it is in the bag market as an example. There's sitting there collecting dust. A big wholesaler gets called and said, "Hey, how many bags have you got?" We got, I don't know, make up a number, 1,200. All right, send them all. Can you get more? I got a big client that, we're going to start, wants them or whatever. So it can move, it can turn very quickly. And because of that fact, I do think we could see something in the 40 range. I really don't know, depending with all this stuff that's going on with the change in the government, it's AI getting everyone pushing toward, the more of a crypto based real ID, more controlled either privately or governmentally um, basis of a new financial or monetary system via the blockchain. There's a big push in that direction, as you know. And so this will, or I think that will mitigate the importance of gold and silver in the future. Many think that gold and silver will be tokenized. It is already on the private end. Whether it will be tokenized on the international end with BRICS using, let's say, gold in part of their quote unquote currency. Still, it's more rhetoric than actual substance. But gold is more likely to enter the monetary system in some way, shape, or form than silver. Silver just does not have the correct relationship to gold at this time, at least, to become money. In order for silver to become a monetary asset, it has to be far more valuable per unit, which means the gold silver ratio has got to get back to the monetary ratio of like 15 to 1 or maybe 1/10 the price or 1/7 the price. Now, if you got into that kind of a gold silver ratio, it would have enough value per unit where you probably could start using it as money. But until you get into those type of ratios, it's really inconsequential on the political, or excuse me, on the financial spectrum, where gold represents about 1% of the total financial system. Silver represents about 0.02% of the financial system. So think about, how big an impact 0.02% has. Not much.
Okay, I was going to leave it there, but quick follow up because I love numbers in those statistics. So you said silver is 0.02% of the financial system. Do
Yeah.
you happen to know, do you have that figure for 1980 or 1934 by chance?
Well, in 1980, gold was about 5% of the financial system. And during the Hunt situation, we did touch the gold silver ratio at $50 silver, which was 116 to 1. So you could take that 5%, and then you'd have to do the math. I can't do it in my
Is that
head,
about
but
zero? Is that about 0.3%
yeah,
maybe?
something like that.
30.31 or
Yeah,
0.32,
probably.
something like that. So yeah, that's yeah, if I have the so 0.02, wow, so that's like 150x.
Yeah, yeah.
Yeah,
Yeah. So you see what I'm saying. See, the
yeah.
thing I that was in, I don't know how much you studied Jim Dines, but I studied Dines from the time I was like almost a little more than a teenager until he died. But there were years I didn't buy the Dines letter, but I read a lot of his stuff.
He was the original Nvidia bug and the original Bitcoin bug, right?
Yeah, exactly. Yeah,
Yeah.
now he's many things, but he used to say, look, don't think, look. And so I was looking at a chart, but I was thinking, then all of a sudden it finally hit me that, the gold silver ratio shows that for, hundreds and hundreds of years, that the ratio is 20 or lower. And then it dawned on me that chart showed you from like 1300, the 13th, 14th, 15th, 16th, 17th, 18th, and 19th centuries, that ratio is 21 or less. But it dawned on me, why was it that? Because they both served one function and one function only, money. And the market decided, since they're both money, how much of this money do you need to convert to that money? How many of these silver pieces, this metallic rounds of silver do I need to buy one round of gold, or vice versa? And the market decided what that was. And the natural ratio during that time was about 12 to 1. And there were times when it traded at 12 to 1. And there are times it traded at 15 to 1 and 20 to 1. The point is that it stayed pretty close to the natural ratio that it came out of the ground all those centuries, because they were both money. Once silver was demonetized is when the silver ratio shot up and up and up and up and up. And then you had the Silver Users Association develop, that came along and said, hey, let's make sure that silver is an industrial commodity only. Forget this money funny business. We're going to make sure that Kodak, Tiffany's, 3M, Dow Chemical, DuPont, and all these conglomerates that need silver for their production basis on the industrial side make sure, hey, let's get it for the cost of production and let's keep it that way. And if you follow Steve St. Angelo's work, you'll find that silver and gold, but primarily silver, has stayed pretty much near the cost of production all the way up. There's been extremes. I mean, when the Hunt situation happened, that was monetary demand, baby. Hunt didn't believe in fiat money. He thought that it wouldn't work. He thought that it would expire worthless. And they were making a big bet on silver, not because they love silver, but because of the fiat monetary system. But there aren't many people that think that way these days, especially that are willing to take on that amount of silver.
But I guess the last thing, you're mentioning the gold silver ratio, down below 20, because, I know you've studied the history, I've studied the history. David, every major peak over the last, 100 plus years, it gets down to 15, 16x. And, I look at numbers and I just look at, I mentioned this in my book and I'll send you a copy. Um, just about how high gold could potentially go. And I don't want to put out the numbers here; people can read about them. But you look at the numbers where gold can go based on the S&P, the monetary base, and where the secular peaks in precious metals have been. Silver going to four digits is done. That's a done deal. Like I mean that's. But I like what you said. It doesn't mean it's going to stay there. That's a very important caveat that nobody other than you says. I mean, you give these targets, which some people think you just, not you, but they think other people pull them out of your ass or out of their ass. But if you say it's going to go there, but it's not going to stay there, I mean, that makes it sound a lot more logical. But anyway, like I'm droning on. But yeah, that's just my point is silver to four digits is a done deal, in my opinion.
Could happen. I don't want to drone on too much either, but I wish the guy died some time ago. We became very close, very well off, lived in Chicago. He owned apartment buildings, huge amounts of apartment buildings, and he housed mostly students that attended university. Regardless, he would trade silver in large amounts. He knew the floor traders. He knew everything. Anyway, the point I'm making is there was a guy he told me about. I never heard of him. And I know most people associated with silver that have made a name, or some that haven't made much of a name, but I know them anyway. Point being, this guy came on like a CNBC way before CNBC and said silver was going to hit $212 an ounce. And that's when like the price was at 5. And he also made the caveat, going to hit that price. It's not going to stay there forever, but it will. So I don't know if it will or it won't. I've written $100 silver back when silver was at 5, back in 2003. I put it in my book. I can't erase it. It's still there. I still think it'll get to that point. It may get higher. The problem is when you give these outlandish numbers, it makes you sound to the layman, and they may be sane people like they're a little bit cuckoo because in order for it to hit those numbers, you got to get through 50 again, and you got to get above 50 for the first time and maintain that. And then you got to get to 70, and then you got to get to 80, and you get to 90, then you got to get into triple digits. And I'm well aware of that. So I always like to leave it with, I think we will get to triple digits silver, maybe even beyond that. But before we get there, we got to get through, that major resistance of that $50 nominal price first. And I'm well aware of that.
Right. All right, David, I'll let you go. Thanks so much for your time today. I and my viewers and listeners, we really appreciate it. And finally, please let our listeners know where they can go to follow your work. How can they subscribe to your services?
Yeah, first thing is the the main landing page is themorganreport.com. Sign up for our free work, and we'll send you information 3 or 4 times a week. And secondly, please check out my documentary. It's being edited as we speak. It's silversunrise.tv. No, the silversunrise.tv. There's several trailers on there. It's about the fear and control money has over our lives and what we, the population, can do about it.
Okay, David, thank you so much. I'll let you go. And as always, hope you can come back in several months and we can chat about how things are progressing in gold and silver markets.
My pleasure, Jordan. Thank you.
Thank you for tuning into the Daily Gold Podcast. For more interviews, editorials, and analysis, log on to TheDailyGold.com. And for premium coverage of precious metals and the best junior mining companies, visit TheDailyGold.com/premium.